everyone. It is Friday Night Live. I am coming on to answer a question that I got in email. Tonight it was about the Federal Employees Group Life Insurance. So the question is, I have a question about FEGLI, Federal Employees Group Life Insurance. I just realized that I am paying about $1,200 a month for basic plus B and C at 5 times. Does this mean I'm covered at $600,000? I'm still 75 and I am 75 and still working. Can you please explain this to me? So when federal employees enroll in the life insurance program, there are actually 4 components that they can be enrolled in. The first one is called Basic. Basic is automatic enrollment. When we hire a new employee, we automatically sign everybody up for that. This one is very inexpensive as long as you're working for the federal government, because the government is paying 1/3 of the cost for the basic FEGLI. There are no recurring open seasons with FEGLI. I won't say they don't happen, because they do, but they're not on any kind of a schedule. The last open season that we had was in 2016, and the one that we had before that was in 2004. Now, this is only 15 cents per $1,000 of insurance per pay period, or right about 30 cents per $1,000 per month for employees while they're working. So if my basic rate of pay is $61,847 and I die, we're going to round that up and add $2,000 to it. We're going to pay my beneficiaries $64,000. That's the value of my policy. I have to pay 30 cents per $1,000 per month. So for that $64,000 policy, I'm paying $9.60 a pay period, or $21 a month. The basic has nothing to do with age. So a lot of times people will think, oh, as I'm getting older, it's getting expensive. Not this one. If you're enrolled in the basic, though, and only if you are, because it's a prerequisite to getting anything else, you might sign up for option A, option B, and or option C. And you don't need to get A before you get B and get B before you get C. You can get any of them in individual combinations that you like. The optional insurances are based on age, and they do get more expensive every 5 years as you age. So I'll show you what that looks like in just a minute. But the basic life insurance is one set price while you're working. It will change when you retire. Maybe. You have a choice to make. You have some paperwork to fill out when you're retiring, and you opt how this is going to look later on. So if I am enrolled in the basic life insurance, and again, I am when I'm initially hired, unless I sign a form and say that I don't want it, which I could do at any time. If I'm in the basic life insurance, it does contain an accidental death and dismemberment clause, which I don't pay anything for. But if I am involved in an accident that causes me to lose a limb, to lose my eyesight, or if my death was accidental, which I know sounds really weird, but it just means it was something that was very quick. It wasn't a long-standing illness that the person battled with for a long time. It was something that was really, really quick. If it was an accidental death or there was a dismemberment, the FEGLI pays an additional $10,000 for basic, and if the person has option A, an additional $10,000 on top of that as well. Employees don't have to pay anything for accidental death and dismemberment. It's automatically included at no charge. Now, I can take the life insurance into retirement with me as long as I've had it in place for the last 5 years that I was working. That is a requirement. I can't take the accidental death and dismemberment out the door with me. That is only for actively employed personnel. There's also an age multiplication factor for our basic FEGLI that says if someone passes away before having their 45th birthday, they have additional life insurance without having to pay for it. Somebody dies prior to having their 35th birthday, FEGLI is valued at double that person's annual pay. Once we have our 35th birthday, the value of that policy is going to decrease at 10% per year until We're 45 or older. Now there's nothing extra added in. We're back to that annual salary rounded up plus the 2,000 that I gave you the example for. As there was no additional charge for the accidental death and dismemberment, there's no additional charge for the age multiplication either. It's simply automatically included. Now here you can see your options, remembering that basic is a prerequisite. Now, the gentleman that wrote to me had basic. Okay, so that one's pretty inexpensive. Yes, he's 75. Age doesn't matter because he's still working. He also had option B, where people can select 1 through 5 times their annual salary. And he had option C. So option C allows you to get life insurance on your family. You can have $2,500 for your children up to age 22, $5,000 for your spouse, and you pick a multiple of 1 through 5 times those dollar amounts. These ones are based on age. Now, he didn't have option A, but if you do, that's an additional flat $10,000. Option C pays you if something happens to one of your dependent children or your spouse. Option B, option A, and basic pay your beneficiaries if something happens to you. So the optional insurance increases every 5 years. It's not too bad until you're 50. But between 50 and 55, that insurance is going to double in price. And between 55 and 60, it triples in price. Unfortunately, you don't get any advance warning. There's nothing that comes in the mail that says next month when you have your birthday, all of a sudden you're going to be paying your entire paycheck for life insurance. We don't pay attention to it. We came on board however many years ago. Our life insurance premiums have been coming out in the background, and we just don't notice it until we have one of those very expensive birthdays, which is what happened to this person. We don't have open seasons very often, I told you that. You can't increase or get anything new unless we do have an open season or you have a qualifying life event. But you can cancel this at any time. You can decrease your multiples at any time. So a lot of times people will come to class and just like this gentleman say, wow, I had no idea what I was paying. I mean, he's 75, so you can look at the rates that he's paying there. A lot of times people will come and go, I had no idea. Can I cancel this? Like, yes, but here's what you want to do. He asked, right, what's the value of my life insurance? You need to figure that out. Your basic is your annual pay plus $2,000. Your option A is another $10,000. Your option B is 1 through 5 times your annual salary. Your option C is $2,500, $5,000, 1 through 5 times that amount. So add it up. What is the value of your life insurance policy and what is your intent for this policy? Do you have enough? Do you have too much? Is this a good time for you to cancel it or to decrease your multiples? And if it is, maybe you can put that money to better use by not paying those premiums and increasing what you're putting into your TSP and investing for your retirement. Just an example. I mean, keep what you feel you want or need to keep, but maybe you can cancel or get rid of some of this because his intent, and we had a bigger conversation that I'm going to share with the entire group here, but throughout that discussion, he doesn't want $600 worth of life insurance, and he's paying a pretty substantial amount for that. So by canceling that, he gets more money in his pocket, or he can invest it, and he could always leave his TSP account to his loved ones if he wants to do that as well. Now, like I said, when you retire, you will decide how this insurance is going to change. So you've got 3 choices for your basic FEGLI. Basic starts at your annual salary. You can choose to have it stay at that amount for the rest of your life. If you do, that's called no reduction. And while the value won't change, the price does. Because the price is going to go up from what you're paying right now, 30 cents per thousand per month, to $2.45 per thousand per month if you're under 65 at the time of retirement. If you're 65 or older, like the gentleman who sent me the question, or when you have your 65th birthday, right? It's at retirement or when you have your 65th birthday, whichever's later, then if you kept it at no reduction, full value, the price is going to go down to $2.13 per thousand per month. It's still a lot more than the 30 cents that you're paying right now. So the second choice that you have is to carry your basic life insurance at something that's called a 50% reduction. If you elect that, you retire under 65, that one is going to cost you $1.03 per thousand per month. But if you die before you have your 65th birthday, it is going to pay out your annual salary. Once you have your 65th birthday, or as soon as you retire, whichever's later, if you elected the 50%, the value of your policy is going to begin to evaporate at 1% per month until 50 months after it starts going down, half of the policy has disappeared. That's going to stay at 50% for the rest of your life. Okay, it's less expensive. The third choice that you could pick at the time of retirement is something called the 75% reduction for your basic. If you pick that and you're under 65 at the time of retirement, you're going to pay what you've always been paying. You're back to your 30 cents per thousand per month. You die before you have your 65th birthday, the policy pays what it's always been paying. Nothing changes. But when you have your 65th birthday, or as soon as you retire, if you're still working at 65, then with the 75% option, your basic life insurance is free. It costs you absolutely nothing, but it will evaporate at 2% per month until 37 and a half months after it starts going down. 75% of the policy has disappeared. It's going to flatline at 25%. Now, a lot of people pick this, and I'm not saying that that's what you should do. A lot of people pick this because they pay the same amount, working and retired. It's never going to be valued at less than 25% of their annual salary. And when people sit down and think about what their intent is for the life insurance, they go, yeah, that's plenty. I'm looking for a burial policy. I'm looking for something that's going to cover the final expenses. 25% of my annual salary is going to be plenty for that. And if that's you, then you could elect the 75% option when you're filling out your retirement paperwork. If you carry A into retirement, which you can do as long as you've had it for the last 5 years, then it will begin to reduce when you're 65 or as soon as you retire, whichever's later, at 2% per month until it goes from $10,000 down to $2,500. There's no alternative choice. That's how A behaves every time. When it reduces, it is free, but it is going to be valued at only $2,500. If you have B, like the gentleman that contacted me, and or C on your family members, you have two choices at the time of retirement. And I like to call these the all or nothing choices. The Office of Personnel Management actually calls them full reduction and no reduction. Full reduction for me is the nothing choice. Because if you elect full reduction, once you're 65 or as soon as you retire, whichever's later, it costs you nothing. It's free for the rest of your life. But it will also reduce in value at 2% per month until it is worth nothing. That one's going to go all the way to zero. It's not going to stop at 25 or 50%. Now, alternatively, you could elect no reduction, which I call the all choice. Because if you do that, you pay premiums for all of your life, remembering that it does go up every 5 years. But no matter when you die, the insurance company pays all of the starting number. Completely up to you. So that answers this gentleman's question, and I hope that it's helpful for you as well. This is an area that a lot of people will struggle with when they come into the retirement classes. They don't really understand how their life insurance will carry into retirement and what their options are. Let me know if you have further questions about it. Let me know if you have other questions that you would like for me to cover on future Friday Night Lives. I hope you have a great weekend. Take care of yourself. Thank you so much for stopping by.